Depreciation. What is it and how can it benefit you? Let's talk about one of the biggest tax benefits for real estate investing and business owners. Most people have heard the word depreciation, but they don't really know what it means. My name is Erica Neal. I'm an authorized infinite banking practitioner, and I work with real estate investors and business owners on maximizing their cash flow. Also, I'm not a CPA, and this is not tax advice. Depreciation is the IRS's way of acknowledging that your business or your equipment, your property, wears down over time. So even though your property might actually be increasing in market value, for tax purposes, the IRS allows you to write off a portion of that cost every single year. Commercial and residential properties are treated a little bit differently. For a commercial property, you can write that property off over 39 years. A residential property, you can write off over 27 and a half. I'm going to use an easy number of $1 million because it's easy to chop off a couple of zeros and make it proportionate to your personal situation. If you own $1 million commercial property and you can write it off over 39 years, that means that every single year you can write off $25,641. Writing off that $25,000 from your commercial property means that you're saving at a 20% effective tax rate, you're saving $5,128 a year in taxes. If you own $1 million in residential real estate, then you get to write that off over 27 and a half years. That means you're writing off $36,363,000 every single year from your property, which at 20% is saving you $7,272 every single year in taxes. But wait, there's more. There is an accelerated option for depreciation, so you can take advantage of what's called a cost segregation study. This study is exactly what it sounds like. They are going to go in and break down all the components of your property and segregate the cost of each aspect. So they're going to help identify, well, your carpet is going to depreciate much faster than your roof, but your roof is going to depreciate faster than maybe the brick veneer on the outside or the foundation. So they go in and they break down each individual cost component of the property, identify how fast that particular aspect is going to depreciate, and help you write off bigger chunks of your property faster, sometimes even in the first year that you own it. This is probably why you hear real estate investors say, I made cash flow, but I didn't pay much in taxes. And for business owners, the same concept applies with your equipment, your vehicles, improvements. All of that goes to offset the income generated by your business. Okay, Erica, but what does that have to do with you and infinite banking? When you use an infinite banking policy to invest in real estate or invest in your business, that investment is treated same as cash. So you get to take advantage of all of these depreciation benefits. This is very different than when you borrow from an IRA or a 401k, because when you use that type of money to invest in real estate or business, all of these depreciation benefits are not available. Depreciation is a powerful wealth building tool. Give me a call. We can talk about your individual situation.